Hello guys, and welcome back to the Cedi Investor. Now, as you guys all know, one of the companies I just recently bought was Enterprise Group. So I thought it would make sense for me to actually go over why I bought the company. We're going to go over everything about the company, and we're going to build a bull or bear case. So if I think it's bullish, or if I think it's bearish, or it's a sell. We also go over the recent statements of the company. We are going to go over the full year and the Q1 2025. And finally, we are going to look at my DCF model on Enterprise Group. We are going to see if it's attractively priced, and based on my assumptions, we are going to check if it's a good price to buy at the moment. So if you are unfamiliar with the company, Enterprise Group is actually an insurance company, and they provide insurance services in Ghana, Nigeria, and Gambia. We have Enterprise Insurance, Enterprise Life, that's like for, I think, insuring yourself before you die, I think so. Enterprise Trustees is the group pension, that's for pension purposes. We have private pensions as well. In Ghana, I think it's tier 2 and tier 3. Tier 2 is compulsory, tier 3 is optional. Yeah, I think so. Then we have Enterprise Properties, they deal in real estate as well. Transitions, and that's for funeral services. And finally, we have Akekia Health Insurance. I like to invest in high quality companies, so resilient across every macroeconomic environment, and also competitive modes, robust fundamentals. So you're going to go over their earnings and we'll see that. And shareholder focused capital allocation, reinvesting back to me as a shareholder, either through dividends or growing your revenues and increasing earnings and whatever. Favorable valuation, I want to buy you at almost a cheap price. And lastly, strong balance sheet. Now I'm recording this video on a Saturday. Today is 21st of June, and we can see that Enterprise Group is now trading at 2.86 Ghana cedis per share at the moment. So let's go over their financials and see how the company is looking like right now. If we look at the total revenue, we can see that this is the trend I usually like to see. The company growing, and not just growing, but growing at a fast rate. Now trading 12-month trailing 2 billion. 2022 was basically the domestic debt exchange. So almost every financial institution, including insurance companies, also had some issues. Operating income is still the same trend. I like to see that. But let's look at their margins, how the company is looking like in terms of margins. We can see the operating margins over the past few years has been amazing. It's been growing at a fast rate, but unfortunately from 2020 it was really down. So it really just started picking up from 2023. So I would love to see way more. I think I'll probably have to give it a couple more years to see how it continues to grow margins, but it has been great for the past few years. Looking at the profit margin, it's actually almost the same scenario, but from 2023 we can see it's been growing at a heavy rate. So I like that. Free cash flow margin is almost also the same thing. So basically, almost since 2023, the company has been amazing when it comes to margin growth. It has been growing its margins at a pretty fast rate from 2023, but it's just we only have 2023 and 2024 figures. So over the past 5 years, it hasn't really been amazing, but for the past 2 years it has been good. So I'll probably have to wait and see more. Looking at the company's cash positions, we can see this. It was pretty much flat from 2020 to 2022, and it grew 2023 and 2024, but it has pretty much decreased so far this year. I probably think it's because they are investing way more. I think so basically the only reason why their cash position is down right now is because they are investing almost all their money at the moment. So hopefully that does bring return. If not, company very shit. But that's good to see. They are growing their assets at a pretty fast rate. Even in 2022, they actually grow. So that's amazing to see. The total liabilities is also growing. I don't know if is it at the same pace as the assets. I don't think so. I think it's even almost at that 1:2 figure that I normally want to see when it comes to assets. I want to see assets almost double liabilities in companies. It's not a must, but it's something I like to see. I think this is pretty much close. So that's good. We can see that the shareholder equity also increasing now at 1.7 billion. So they are priority shareholders. Net cash is down this year because they are investing. So hopefully by the end of the investment, they will make returns to bring back this net cash position. But over the past 5 years, there's literally been little to no debt, and that's amazing. So they are keeping their debt on the low, growing their cash positions, their investments, and yeah, I like that. When you look at the book value per share, you can see they are growing it. So as a shareholder, the worth of the company that I own is increasing gradually, and that's good to see. The same can be said for the tangible book value per share. So almost all their margins are growing. Even the ones that were not growing over like 3 years ago are now growing from 2023 to 2024. Looking at the ratios, we have the price to earning ratio here. You can see it's at the lowest level it has been over the past 5 years. It's now trading at the cheapest value you can buy it. Wow, interesting. Same for the, okay, it's a little bit up, but wow, the lowest, almost the lowest level compared to the past 5 years. The same for price to book ratio. The lowest amount I'm paying for the worth of the company, and the lowest amount I'm paying for each sales or revenue that the company generates. Amazing to see. Debt to equity ratio, the lowest it has ever been. I don't want my companies to have a lot of debt, or I want my companies to be paying down debt at a very fast rate. So I like to see that. Now let's look at the return on equity and the return on assets. Return on equity, the company is generating from 2022 a higher rate, now 24.6. Most banks actually do 30%, so I would love to see that figure increase by the end of this year. I would love to have it returning around 30% plus. Yeah, I like return on assets. Yeah, around 5%. That's not bad. That's not bad at all. So going over the company, what have we learned? I understand the business, an insurance company. Is it growing free cash flow? Yes. It has been growing the free cash flow for the past 2 years. Since 2022, from 2020 to 2022 was quite down, but then over the past 2 years, 2023 2024, we've been growing it. So I want to see way more, but it's good to see. Earnings per share growth has also been increasing at approximately 30% year on year. We can also see that most of their margins are expanding after 2022 DDEP. Their cash on hand is strong, but it actually reduced in Q1 Q2 2025. So I would love to see the money come back after the investments. Hopefully they do make return on their money, and that cash position will go back up. When you compare the assets to liability, it's not really at the 2-to-1 ratio that I want. It's mostly 1.6 to 1, but it's very good. Even though I'm not going to give it to them, like I think 1.6 is actually it's very good. You don't have a lot of companies, especially in Ghana, having 2-to-1. So it's okay. It's okay. Paying down debt, they have low debt, literally low debt. And even compared to the cash position they have on hand, they can literally pay down almost all their debts at the moment. Are they consistently paying or growing dividends? Yes, they are. Year on year, about 18% in dividend growth, and they are always paying the dividends. And that's another bull case for me. I think the level of free cash flow that enterprise group has on hand and is growing at a fast rate, I think the amount of dividends they can be paying within 2 to 3 years from now will be growing at probably 50 to 60%, because they just have a lot of money on hand that I do think they will be returning that back to investors. So that's another good case for me. When you compare their ratios to historical levels, we can see that it shows attractively valued. So from a ratio standpoint, we can see that the company is massively undervalued. Low debt to equity ratio, and its return on equity and return on assets is above the market average at 16% and approximately 4%. It also has a durable competitive moat. When you look at Ghana, for example, there's not a lot of names when it comes to the insurance company. When you look at Enterprise Group, its only competitors are like SIC, maybe Prudential, but all these other companies are worth less than Enterprise Group. They don't have the financial capabilities of Enterprise Group, and the rate at which Enterprise Group is growing its revenues, returning money back to investors, even growing its dividends, I don't really see something like State Insurance Company competing with Enterprise Group. The earnings alone, its earnings, the rate at which they are growing their earnings, just massively. Now let's look at the discounted cash flow analysis. We can see that my assumption here is that I want to see Enterprise Group growing their free cash flow by about 5 to 10% each year, which I think is very realistic. And looking at that, with their work being at around 17.8%, there are a lot of assumptions that I put into this to get this discounted rate. We can see that Enterprise Group has an enterprise value of 4 billion with its cash less debt and divided by its outstanding shares. And this is where it's very interesting. I wouldn't say that Enterprise Group has like the biggest market cap, but because its outstanding shares is just so small, I think it's one of the smallest on the Ghana Stock Exchange, you as a shareholder, you get to enjoy way more from the company. So I'm not really fighting with a lot of shareholders to get value from the company. They only have 170 million outstanding shares, way low. Maybe for context sake, GCB has about 240 million outstanding shares. Cowbank has about like 600 million outstanding shares. MTN I think has about more than 1 billion outstanding shares. So like, just for context to really understand what I'm talking about. So based on my assumptions, if Enterprise Group can continuously grow its free cash flow at the rate that it's doing, I think its implied value per share should be around 31 Ghana cedis, and Enterprise Group is currently trading at 2.8 Ghana cedis. Now I don't expect us to reach this share price anytime soon. I don't think we'll even get there within like the next 2 to 3 years, maybe 5 years plus. But should this company continuously maintain its earnings growth, growing its operating margins, and continuously growing its free cash flow, I do expect this company to be really trading at its fair price. So based on this DCF, it shows that the company is massively undervalued. Now finally, let's end off with a couple of bear cases that I do have for Enterprise Group. I just went through their Q1-2025 earnings reports, and I'll say I was cautiously optimistic. You might ask why. Let's go over it. Looking at their statements, right? Just their income statements, we can see that when it comes to the group, revenues increased massively. We can see that their net income also increased from 189 to 236 million. That's great to see. The same for net profit, 102 to 104, and the earnings per share, they are growing my earnings per share for me as an investor from 0.3 last year for in Q1 2025 to 0.49, almost 0.5 in Q1 2025. But one thing I don't like seeing is when you look at the company side, you can see that earnings are actually reducing. The same for net income, and it's the same thing for earnings per share. Now I actually improved its earnings per share for me this past quarter, but I still don't like seeing it to be negative. It means as an investor, when it comes to just the insurance part of Enterprise Group, I'm losing money, and I've been losing money from Q1 2024 to now Q1 2025. So that's like the first red flag I saw when it comes to this particular company. The group is made up of all the subsidiaries, so the funeral, transition, life insurance, real estate, whatever, everything. But the main company is just the insurance part, enterprise insurance, and that makes up about 14% of enterprise revenue. So if that particular 14% is losing me money, it's either I would advise the company to diversify their attention to other areas or find ways to improve that particular area of the business. Because as an investor, I don't like to see 14% of my revenue source going down. No, I don't want to lose money on 14%. Either you could have used that money to make more money for me in other areas, or you can improve it. So I think that's one area that the board of enterprise group should be looking at and trying to solve, and I'll be looking at that in its Q2 2025 report. So yeah, this was very interesting for me to see. I even checked their full year 2024 report, and I can even show you guys here. We can see that it's the same thing. The group actually increased from 0.6 to 1.4 in terms of earnings per share, but the company, the insurance part, actually went down from 0.31 to 0.306. Try. So the board last year was not good for the insurance part, and this year too, you are starting off on a bad foot. I want to see you improving. Either if it's not working out, Charlie, shift the focus to other areas, or find ways to Charlie solve that part. Simple. Give me why. I'll really be looking for that particular area when it comes to his Q2 2025 report. So that's the end of this video. Let me know what your thoughts are about enterprise group. Do you think it's a buy? Do you think it's a sell? What do you think about my DCF model? Do you think the price is attractively valued right now for you to buy it? And lastly, do you think other companies are worth it, like maybe SIC? It's up about 300% this year, and enterprise group is like up 30% or something like that. So it's just interesting to see. I personally think out of the two, enterprise group is a way better company compared to SIC, and I would rather put my money in the highest quality company. Thank you so much for watching, and have a wonderful day.